Welcome to Trading Lounge and the daily stocks for Friday, September the 10th, and starting with Amazon here. So as you know, on the daily chart here, we've been tracking this little move to the upside here in 5 waves. So let's go in and have a little look at that. Because we've got 5 waves in this particular move here, we'll have a correction and then another 5. But I need to talk about this top here first. So just moving into 100 ticks. So a couple of things here is it's very clear that we have 1 and 2 and 1, 2, 3, 4, 5 for the third wave, the fourth wave here. So I thought that we may just have wave 1 here and back for wave 2 and then going up for wave 3. It still may be the case, but there's also a good case now for wave 5 to be top in place here as well. Something's not quite counting right at this top here. So what we're going to do, we're going to bring the stop to 34.62, which is below the 61.8% retracement level here for this. We expect Thursday to be bearish in our bullish weekly cycle, so let's see if we get Friday and Monday to be bullish. Okay, so we'll just chill on that a little bit, and let's move into Google Alphabet here. So with this market as well, we've got wave 4 here, and we're going to wave 5 in blue here of minute degree, and then we've got wave 1 and 2 and 3 here, and wave 4 coming back. Let's just take a closer look at this. So from wave 2 here to the top of wave 3 there roughly, the 38.2% retracement level is here, and that brings us down to 28.30, say 28.36 would be a nice number for that there. We've had our stop at 28.12. I'm just a bit concerned that you know, that we can pull back down through here. So I'm going to bring the stop up. We're going to probably get stopped out at 28.62. So I'm putting a stop at 28.62. Of course, you don't have to take that. You may want to ride this out here. Let's just have a little look at, this is 100 ticks. Let's just have a look at this on 10 ticks. So in a nutshell, we've got 1, 2, 3, 4, 5, so we can use that as the top. So we can put wave 3 there, and wave 4, we'll just put there for a moment. And we can see here that you can see quite clearly that we've got 1, 2, 3, 4, and 5 here. So because we've got 5 waves there, that means we'll get a retracement back to the 50-60%. Which brings us into that nice 50-60% retracement level there. So because we've got 5 there, that means we should be getting 5 over here for wave C. Can I still use that? No. There's wave C there. So that means we'll get 5 waves. I'm thinking this is all 5 waves here. It's a little bit dodgy, and there's a good case for actually having this as wave 1 and back for wave 2 there. That would leave this here as the A wave, the B wave, and the C wave, but I don't think that's the case. So I'm just going to put that there. I'm just going to reduce that in size. So I think that we may be looking at something like this. So you may not want to go through this journey. So that's why we're putting that stop just in there nice and tight. We can move back in if we need to. So in a nutshell, we've just got the stop sitting under here for that. So I'll leave that with you. So just take that on board as an idea, another idea for the hat. But yeah, looking at that would also be 1 and 2 here, and that would be 3, 4, and 5. So we're going to be in here a little while, you know. So you may not want to go through that. So if you're going to get out, that's the point to get out at. Okay, moving on a little bit here to Apple. I've also got this date line in here, which is the 21st of September. So that's the equinox. the equinox has got quite good turning points for the market, especially March. March has always been a really good turn for bullish markets, and it was the turn for the COVID market too. So the equinox, depending on where you are in the world, we could look at that at around March the 23rd. So that was pretty much the beginning of the COVID bull run. So we'll just keep an eye, just kind of matches nicely. So we'll come back to that a little bit later. It's not a big deal. So with this market here, we're looking from wave 4 to wave 5 up here, and we can clearly see 1 and 2 here, and we can look at 3, 4, 5 in here as well. Now it just depends how you count this, because we may be able to count this from down here as 1 and 2 here and have all of this as the third wave, and then a fourth wave, and then a fifth wave up here. So there's different ways to count this, but I wouldn't be too sort of wouldn't be too fiddly with this one, to be honest, because you know, we'd be looking for a classic trading levels pattern, not that one, this one here. So basically we've been looking for, if this is the 400 here, is it the 400? I lost the plot, the 150, sorry. The medium level 150 here. So we've had the arrival, we've had the reaction, and now we're looking for 5 waves up here. It's just that this reaction here was a little bit messy in this case, so it's left me a little bit lost. So we just need to be a little bit more cautious about this here. Normally we'd go up into group 1 here, so at the 150 the minor group to the upside there would be 151, 152 and 153 in that particular case. So that's where we would normally look for before this pullback in here. So you know, we're certainly sort of way above that now, and yes, so we could have a top in there, but let's just go in and have a little look at this. Anyway, it's basically splitting hairs from this point onwards, you know. So what we can do is just get in a bit more data. So from this blue wave 4 here, I've been counting it as 1 and 2, and a little bit dodgy the third wave, I grant you that. Third, fourth and fifth wave to have that high in there, and we've talked about that. Now it's also possible to look at this as wave 1 over here, because I know that Google and a few of the other guys, they still need to go up a little bit higher as well. So in this instance here, we can have this as a wave 4 coming down to this area, and then wave 5 moving up through there. But I'm unsure about that, okay? As I mentioned yesterday as well, I'm sure I would have done. So we've got this little impulse wave to the downside here, and then we've had this corrective rally back into our 61.8%. And now we're on this little journey here. So we don't have to pull all the way down through here. Friday can give us a bit of a bullish day, but if we're looking at this structure here, we'd have to look at this as 1 and 2 here, and then all of this, the third wave here. So that's 1, 2, 3, 4, 5 into here, and that's another 1, 2, 3, 4, 5, third wave, fourth wave, and fifth wave. So I think there's still a little bit more to come here. So that would be bottom of the third wave, and then we would have a rally back to the wave 4s here, and then that would give us 5 waves down at that point. So you know, we may not come all the way down here for this, so we can move up at that particular point. At this stage, being on top of 55, the midpoint, that would be the long trade at that point. And that would probably take us up to maybe 162. So 62 is important because it's in geometry, it's the 61.8%. So yeah, in that space there would be about right. And that taking us into the, we'll start, obviously we'll adjust it, but we're looking for this wave 3 top in indices and everything else around the 21st of September. Okay, so that gives us a good 10 days to get there, but obviously there's weekends involved in all of that. So yeah, so I'm a little bit unsure about what we should do in this particular instance. We've had our trade, so I'll just leave that with you on that note. And Square on the daily chart here, as you know, we're calling this wave 3 in here because We do have that 5-wave structure there. Of course, there's a few little problems with it, but overall it's the best fit. And a few things that we need to be cautious about here is that this 1, 2, 3, 4, 5 here, that could just be wave 1 here, right? And then we pull back for wave 2 at the 61.8% mark here. So we can look for 5 waves in this move here. We're going to get support here anyway. We can see that you know, at the top of minor group 1 at that point. So we're going to definitely always get a. If you're always moving into 3, you'll get a. If you're moving back into 3, you'll get a bounce. So we could just come to there, and that could be the end of it. It could be the end of it in 2 ways. It could be that I don't think it's going to be 1 and 2 here. I don't think that's the case. I think it's going to be more likely the A wave, but the A wave here, because it's a wave 4 and not a wave 2, the A wave can be in 3 waves here. Or it can be in 5 waves, so we'll have 4 and then 5 down here. It would be nice if we get the 5 waves, because then I know that we're in a flat correction. It's going to make things much easier at that point, and then we'll just have a B wave and another 5 down to finish that off. Yeah. So I listened to a seminar last night, and a gentleman called Alan, he mentioned that most people think that the bear market sort of happens in October, but he had evidence that it happens in September. So that kind of fits in with the equinox timing as well. So yeah, anyway, this is where we are here. So what I'm saying here is that we've got a short position here. You may want to cover it at 2:30, or you may want to allow it to play out, but at least take something off the table at 2:30. Now we can look to add to this position as well. Let's just move into the tick chart here. So I've just got the stop at break even at this particular point in time. From wave B here down to wave C here, we're looking for 5 waves. So we've got very clearly 1 and 2 in play, and then we're going down for wave 3, 4 and 5. Now that may be C, or it may be wave 3. So let's just put that there. And of course this is the 2:30 at this point. So we should see this, we should see a little dance across here. So when you know, we've always been, not always, but you know, we've been in a bull market, so we've been looking at bullish counts, you know. So this is the bearish classic trading levels pattern 1 here. So looking at it upside down now, so we've got the arrival here, we've got the bounce here, and we're looking at this point here now coming through here and then pulling back here. So if we're going to add to a position, we need to first of all get that first low in place over here, and then look at it over here as well. Now we may get it more simple than this, so it may end up not coming back above the level. So we just need to be aware of that. It shouldn't bother us at all, because we use this reference point low here as an entry, and then hopefully we can get a better entry in here for that. So with that said, we're looking, there may be another bounce here, but in a nutshell, well, we'll just put a little in there, there should be a bounce there, but in a nutshell, we should move through here to finish that wave 5 off, and then we should be seeing an A wave, a B wave and a C wave back for wave 4. That can also pull back 38.2%, but this is where you've got to be careful, because when you're working with large numbers, the large numbers they're like magnets. They can have a bit more of a pull onto the psychology, the volume. Psychology is just really the volume, but that's the 38.2% retracement level. That's the wave 4 of 1 lesser degree. So there are little flags that we swim between, and then we'll see this move down here in 5 waves. So we'll see another little thing like this. I don't know how far that's going to extend down, but that 61.8% will be something that would be looking at as a target, but as always we just need to count those waves here. So yeah, that's kind of where we are. I think by this time as well, it could be quite interesting because that will bring us deeper into the 10 days into where the other stocks, Apple and Google and all those guys, they should be turning down at that point. So we'll see what we get here at that point. But even if it's a wave 4 here, then what we'll do is we'll probably end up retesting the 250 again before heading lower at that point. It's sort of, it looks like a C wave because it's just casually going down, but it is casually going down against the rest of the market, It's been sort of turning down ever since he bought Afterpay, which has been a bit of a success story for Australia, but I do feel that the client base for that company was a little bit low, and secondly, you've got some of the bigger fish coming in like ComSec and all that coming in as well. So I don't know if that was such a fantastic purchase for $28 billion or whatever it was. I mean, unconceivable amount for us peasants, that's for sure. Okay, enough waffling. Stay on track, Pete. Stay on point. Facebook daily chart, wave 4, 1, 2, 3, 4. So we're still looking for a move up. We can also put this as one of, obviously, Facebook and Apple come with some of the bigger ones there. So we'll put that in at the 21st of September. I don't even know what day that is, so we'll just check to see if that's on the weekend or something. But that's kind of our little sort of target that we'll end up adjusting anyway. But yeah, so let's just cruise into the tick chart here for this. So just get a bit more data. I'm bringing in a tighter stop here now, and I will do at the top of the market because stuff happened that not everything tops exactly the same. Where are we here? So okay, so as far as the crow flies, we've got wave 4 here with wave 1 here and ABC for wave 2. Possible to have wave 4 there, so we'll keep that in mind. But otherwise, we've got a nice third wave up here, so that's all very fitting. And then we're looking for the fourth wave that can pull back to the 272 because we're in minor group 2 here at the moment, which is 65, 72 and 80. And we've got ourselves the A wave, the ABC for the B wave, and down for the C wave. So we called that low in there yesterday. So we're going to put the stop there because if that's breached this 5-wave structure here, then normally this 5-wave structure would come a little bit lower. So I just don't want to see this as being wave 1 here coming back for wave 2. It does look a bit impulsive here. This little move here, you see that's in 3 waves? Yeah, so that's our saving grace at this point because that's telling us that that's corrective and we should be going up. And this looks like 5 waves as well, so up for 1, back for 2, going up 3. So that's our long trade. We want to put this only half a position here. So, I mean, technically we should be able to put that under this low, but yeah, we don't want to get too close to it unnecessarily. You can look to add to the position here. If this is a wave 4 here, then normally we could look at, because the extension's in wave 3 here, we can look at wave 1 and wave 5 being roughly the same, so we can just sort of put that there. That will take us at least up to 390. So if you can get to that, then that's your piece of the cake at that point. So that's, yeah, so that, looking for that to come in on the equinox. And Tesla, so yeah, so obviously this market's in a different pattern than the other markets, and in this case we're looking for wave 3 here with an A wave and ABC here for the B wave and then down for the C wave. If I'm wrong here, then I would need to be proven wrong, so I would want to see the 800 as a tested support with the classic trading levels pattern sitting there. So that's what we'll do at that point. As you know, this box here is it's right on the 61.8% mark now for this retracement. So we're close to a top here. Now, yes, it could certainly push higher, and we're going to go in and have a look at that. So on the tick chart, let me get some more data. So my thinking was that we've got wave 4 here, we've got wave 1 and 2, and we're going up for wave 3 here. And then we've got wave 4. Now wave 4 is a little bit small, that sort of haunts me a bit. But still, the rest of it's okay as 1 and 2 and 3 and 4 and 5 for wave 3. So I'm just keeping the stop here. I'm thinking this is wave 1 and 2 and 3 and 4 and 5 here for wave 1, and then an A and a B and a C for wave 2. It may come back down further, but that little push up there tells me that it may be finished at that point. So yeah, we've got support here on the midpoint, but we've got the group 2 here, 65, 72 and 80 as the resistance here. So if you wanted to go long here, you can go along above that point there, because yeah, well, it just makes sense, because this is not 5 waves down here, this is corrective. I mean, you can go 1, 2, 3, 4, 5, but that's not going to give you a 5 wave without breaking any rules. So we can look at it as being corrective, and this here would have rallied 50-60% of that move down through here. So any breach of that you can go long at that point with. So look, we may get up to the 800 on this. Like I say, around the 20th of September we'll be looking at, and in this case here we'll just be looking for wave 3 and 4 are going to play out in group 2 there in their own way, and then we'll push up. Will we get to the 800? Markets love finishing at large numbers, but sometimes they don't quite get there either. So our job will be to be counting 1, 2, 3, 4, 5, and then we'll be counting 5 waves in the 5th wave as well, just to nail that in there the best we can. And that's it. I do just want to take a little detour here. This is JPM here for Morgan's. I don't have it labeled, it's sitting on the 150 level. I was looking at this being corrective here and then making a new high. We haven't made a new high here, so I'm thinking of this as 1, 2, 3, 4, 5 here. So with these guys might top out a little bit later. So we could look at this as 1 and 2 and 3 and 4 and 5 to top out there a bit later for that. BAC, here's got the same thing as well, as 1 and 2 and 3 and 4 and 5. So maybe we've got to look at this as the same thing as well. So should drop that down a level, of course, but just to move up a bit higher. It's Goldman Sachs is the one that's already pushed up higher here. So we've got wave 3 with an ABC for wave 4 here, and we've got, sorry, it's just a different program. So in this case here, we've got 1, 2, 3, 4, 5. So it's possible to have that wave 5 there. But also at the same time, we're just going to keep an eye on these as well, okay? So this is, I'm thinking of the banks being, oh, can I do that? Just seen another way to count it, but I'll double check that. But otherwise, just, because I just want to bring all the stocks into the same fold, and, we're just looking at tech stocks and and the banking stocks, still in play, so to speak, in the world. But the timing for this is out a little bit, So if that's got to move back to this sort of area here, it's just not going to have enough time to complete this, this. So I think this is interesting as well. So I've got to try to prove to myself where I can be wrong, that's what I'm thinking. So, do we get something like that? This is what's on my mind. So the other thing I was thinking, I'll just check with Morgans and the other guys. No, I'm okay. That can't be right. It's okay. Okay, so yeah, well, Goldman Sachs can have a top in play, or we've got wave one here. So we'll just see how this plays out here, this this pullback in here. We can even look to go long in here as well, but this is going to take us higher, you know. Anyway, just food for thought. We'll come back to that. We'll keep an eye on that. That's all I'm saying about that. So I'll leave it at that. Thanks for tuning in. Much appreciated. Cheers.